Among the most valuable contributions the Zacks institutional platform has made that sets it apart in the world of desktop equity analytics software is the ability to seamlessly create or utilize our library of composites. A composite is simply a basket of equities weighted by one of several different methodologies. This basket of equities can be an index composite like the S&P 500, style composites like the Russell 1000 value, sector composites like the Russell 3000 energy, or any combination of the above. Composites can also be your own portfolios, weighted by market cap, equal weighted, or utilizing your own custom weights. The uniqueness of Zacks is that our platform allows you to perform complete fundamental and valuation analysis on any composite. For example, being able to do growth versus value analysis, or looking at your portfolio versus its appropriate benchmark, like for example the Russell 1000 growth. All Zacks data displays, including fundamental charts, tables, and graphs as you see here, populate based on the bottom-up weighted average, which can reveal insightful information about important developments in the equity markets. To see a complete listing of our library of composites, click Help on the ZRS toolbar, and under Data Appendices, select S&P/Russell composite tickers. You may ask what the difference is then between the Zacks index composites, as we see here, with the actual reported indices, as we can see here. A reported index is a weighted average aggregation of constituents whose historical membership is subject to daily change. Index providers calculate and apply a daily divisor to index pricing in an effort to normalize pricing impacts of membership rotation and corporate actions such as splits, cash dividends, and stock dividends. The resulting normalized price index are created for the purpose of performance measurement. ZRS composites, on the other hand, are a weighted average aggregation of constituents whose historical memberships are not subject to change. While each member weight is subject to a quarterly rebalance per the chosen weighting scheme, ZRS calculates all composite pricing, fundamentals, and valuation metrics daily based on current membership applied consistently throughout history. The resulting composite price levels and fundamentals are created for the purpose of fundamental and valuation analysis. In actuality, despite these differences, you can visually see how closely the Zacks index composite tracks the actual reported index, as we can see here. Thus, the Zacks composite affords you, the analyst, the enormous benefit of being able to perform complete fundamental and valuation analysis on indexes without losing very much historical accuracy. So, what are the primary benefits of composite analysis? Number one, first, index providers do not provide fundamentals and valuation metrics for their indices. This problem is instantly solved by utilizing the Zacks composite for any equity index of your choice. For example, we can toss in the S&P 500 healthcare sector. Zacks data displays then calculate the bottom-up weighted average fundamentals based on the members of the index composite that we have selected here, and populates all metrics accordingly. Secondly, you can within seconds perform comparative style analysis, as we can see here. Let's compare the Russell 1000 value to the Russell 1000 growth. We're looking at the aggregate EV to EBITDA for the Russell 1000 value now versus the Russell 1000 growth. As one would expect, you can see that value stocks are inexpensive relative to growth stocks. But Zacks charting tools can illustrate just how cheap they really are. In this case, we can see here that they're more than one standard deviation below the long-term average relative ratio of EV to EBITDA between the two styles. However, if we switch to the price to sales multiple, it appears that the long-run averages are right in line, suggesting that value stocks are cheap primarily because of significantly lower revenue growth. Looking further into valuation here, let's take a look at the PEG ratio. The same story is now being told here by the relative PEG ratio between these two styles, that lowered forecast growth is contributing to an elevated relative PEG ratio. Thus, value stocks seem to be cheap for a fundamental reason, low growth. The same analysis can be performed for your own portfolio composite. For example, the Zacks Earnings Certain Proxy is one of our model portfolios consisting of high-quality, low-volatility U.S. large-cap stocks. We can now perform the same exact relative valuation analysis as we just did for value versus growth, except now we can enter in the appropriate benchmark for this portfolio. In this particular case, it would be the S&P 500. The third benefit of Zacks Composites is the ability to utilize the Zacks Valuation Model framework to perform deep dive into any composites discounted earnings model derived intrinsic value, justified PE ratio, and market implied growth. Just as we can use this model to estimate an individual stock's intrinsic value based on forecast growth and the equity risk premium, we can do the same for an entire index like the Russell 1000, a sector like S&P 500 Energy, or your own portfolio, as what we're doing here for the Zacks Earnings Certain portfolio. ZRS uses the very same bottom-up reconstruction methodology to generate forecast earnings per share growth and present intrinsic value. This type of analytic functionality is not found anywhere else on the market. The last major benefit to Zacks Composites is the ability to create your own broad benchmarks. Several problems of analytic relevance exist between broad-based reported indexes. First is that they have market cap bias. Second, there is the existence of what analysts call tilt sectors, which are sectors whose members share a very high correlation coefficient, therefore over-amplifying factors impacting equity valuations for any given macroeconomic event. And number three, the existence of many companies who have material restated financials or accounting abnormalities. To address these common problems associated with broad indexes, Zacks maintains a small group of pure industrial composite proxies based on current membership of the S&P 500 index. The Zacks pure industrial proxies are a hand-selected group of securities whose combined membership represents the average industrial company, thereby eliminating these so-called tilt sector biases and other accounting irregularities present in reported benchmarks. First, we start with the Zacks Standard Industrial Proxy. This starts with the S&P 500 membership removes all tilt sectors, which again are members defined as companies that can be classified as energies, financials, utilities, precious metals, and most transportation companies. Following the removal of the tilt sectors, all companies are scrubbed for financial statement consistency. Those members exhibiting material restatements and/or accounting irregularities are also removed. The remaining members are counted and, like industrial companies, added until the final member count reaches 400 or so individual members. Membership is monitored and maintained quarterly. Fundamentals are aggregated bottom-up, equally weighted, and resulting valuation metrics calculated from the composite as a single entity. From the Zacks Standard Industrial Proxy come two derivative portfolios. One is the Zacks Cyclical Proxy, and the other is the Zacks Growth Proxy. This begins with the Standard Industrial Proxy membership and ranks each member based on earning stability. The top 40% earning stable companies are placed in the Zacks Growth Proxy, and the bottom 60% earning stable companies comprise the Zacks Cyclical Proxy. Membership is monitored and maintained quarterly. For each proxy, fundamentals are aggregated bottom-up, equally weighted, and resulting valuation metrics calculated from the composite as a single entity. And finally, from the Zacks Growth Proxy, the top 75 earnings stable stocks are pulled forward to be included in the aforementioned Zacks Earnings Certain Proxy, representing the highest quality, lowest earnings volatility, large cap stocks on the market, with a proven track record of stable earnings growth through both boom and bust economic cycles. To learn more about Zacks Composite Library, or to build your own custom composites, feel free to contact your sales representative or account manager. We hope to continue to provide you the unique tools and data necessary to help make better informed investment decisions. Thank you.